Hey, Rich Hilow, Straightforward Wealth Management. Hope you're having a good day. Just had a great conversation with a client. I've got my adult beverage. Why don't you grab one? Maybe a cup of coffee. I want to talk to you about stock markets today. I want to talk to you about what the markets are, because I tend to have this conversation with a lot of people so they can understand. You hear in the news, the market's had a bad day or a good day or a mixed day. What does that mean? And what are those things that make up the market? First thing I want to talk to you about is exchanges versus indices. There are three indices that make up the market on the news, the most popular. Of course, you know the Dow Jones Industrial Average, the S&P 500, and the NASDAQ. Stocks are not traded in these indices. They're traded on an exchange, like the New York Stock Exchange, for example. You've heard that, where most domestic stocks are traded. The NASDAQ is also an exchange. It's also the name of an index, but it's also an exchange. There's also an over-the-counter for a lot smaller, more obscure companies. But these are where the computers are. So when you buy a share of a company, these are where the trades happen. They have nothing to do with the markets, S&P 500 or Dow Jones. These three indices, the Dow Jones Industrial Average, just as it says, 30 of the largest industrial companies in the country. Put them in an equation about this long, they come up with a number. Means nothing. 30 companies, $100 a share on average, 3,000, right? Except the numbers are 25, 26, 16,000. It means nothing to you. I'll explain what the number means in just a minute. The NASDAQ is another sector of the economy, where the Dow Jones Industrial Average is one sector. The NASDAQ is the high-tech sector. The exchange, where you buy the shares, thousands of companies are listed. The index is a small subset of that, just a few of the companies. Again, they put them in an equation about this long and come up with a number. The number is meaningless as far as trying to figure out companies' values. The S&P 500, which is more closely associated with what you probably have for assets, maybe in your 401k or an IRA, is just the 500 biggest companies in the country. Food, clothing, shelter, power, biomedical, pharmaceutical, high-tech, biotech, pretty diverse. That is more closely related to, again, what you have, and that's the number I compare things to. I compare investments to, I compare people's portfolios to. Again, that equation is about this long. The number is meaningless. All the number means to you is that at 9:30 in the morning, when trading opens on the New York Stock Exchange and on the NASDAQ, the number is here. If it ends at 4 o'clock when it closes, up here, it was a good day. Down here, it was a bad day. So when the news talks about we had a good day in the markets were up. That means all three of the indices, the Dow Jones, the S&P 500, and the NASDAQ, all finished higher in the afternoon than they started at the morning. If it was a bad day, just the opposite. They all finished lower in the afternoon than they did in the morning. If it's mixed, that means one was up, two were down, two were up, one was down. There's some sort of combination where one was up and one was down. Those are the markets. Those are the exchanges. That's what the news means when they talk about the markets. I hope that was helpful as kind of an explanation of how the news kind of correlates to you. What you need to be concerned about is if the market goes up, what happened to your money? What happened to your portfolio? Did it go up or did it go down? That's what I help people understand, and that's what I help people do to make sure that they're in the right position given the market going up or down. I hope that was helpful. Till next time, cheers.